So just as we basically put down like the actual processes that will help us in having to delve into this turnover-based method so far as the class example is concerned, we've come to the conclusion of making it a predicament in the values that we actually get to work out to be exclusive of VAT amount values, as those values would have been from debtors, and debtors, as we spoke about the actual statements, those would be balances that are inclusive of VAT amounts, including the fact that most statement balances do not contain actual VAT portion, because by the time they would have gotten there, the VAT would have been accounted for, with the exception of the cash flow statement where there would have been a special line for taxes paid. But in this regard, we're not even worried about the cash flow statement. We're basically making reference to the debtors balances that have been provided to us so far as the actual company in question, so as to work towards an appropriate rate in order for us to get an apportionment rate that would be applicable for us to be able to use as part of the general cost or general use asset. So we've been provided with the actual balances. So in your given situation or in your own prerogative, you can also use a methodology that works for you. You can draw up a ledger account to basically work towards the area of receipt or payment, as we likely touched on the fact that we cannot just use payment value of payments being made as that being part of a figure that will make up our calculation, because VAT entails us to work to the area of receipts or payment, which is why we're compelled to try figure out as to what the earlier amount would have been, which is why we'll have to make use of the balances that are provided to us so far as the opening balances and so far as and all the other relevant information. So we get told within the actual provided information that we've been provided with opening balances of debtors, and we've also been provided with bank amounts as well. So with bank amounts, we've been given an opening balance, and we got told what the receipts were from debtors, and we also got told what interest receipts were as well, so far as debtors. So that's our starting point. So what we know about debtors comprising sales is that there would have been an inclusive of a VAT amount in that debtor balance, whereas with the interest debtors, it is a debtor balance. However, it's not an inclusive of a VAT amount because interest is an exempt financial service. So by the time it got recorded, there would have not been VAT implications so far as the interest debtor balance is concerned. So our opening balance, to work out this figure that we're trying to work towards, we'd start off with the actual receipts that we had received. And that would have been 11,000 rands, 11.7 million, sorry about that, 11.7 million, excuse my error. And then we'd follow that up with balances so far as debtor balances that were provided to us. And the debtor balance, which was the actual opening balance, was the opening balance was 2.3 million rands, which we basically thought down 2.3 million rands. But because it was an opening balance, that basically means that it was taken into account in the prior period. So it's not going to be applicable for our period, so we're going to subtract that balance. Then we're going to follow it up with the closing balance of the actual debtors, which we were told was that's a closing balance. We're told is dating November 2023. We're told it's 2.6 million rands. So that's not going to be an outflow, but rather an inflow in this calc. So we've got 2.6 million rands. That's a balance. So then we go on to add the specific amounts, and then if we are to add to 11.7 million rands, is that right? Is it 11.7 million that we have as opening, as the actual receipts? That is, yeah, we've got it as 11 million. Sorry for the error. Sorry about that. The actual thing is 11 million rands from receipts as per the class example. So if we're to add 11 million to 2.6, we get 13.6. And if we're to subtract 2.3 from 13.6, that would give us 11.6 minus 6, that would give us 10.7. So we've got now 10.7 million rands in terms of the actual worked out figure, but remembering this is an exclusive of a VAT number, so we must now apply a VAT exclusive number in terms of applying a fraction of 100 over 115 to eliminate the actual VAT that was included in the actual value, and this should give us a figure that will likely work out here. So we're going to say 100 divided by 115, which is equals to times 10.7 million rands. And the amount that we get an amount of 304,348 rands. 348 rands, because we rounded it off to the nearest to no decimal, I guess. So that's the first part. So this is the first part of the data balance that we're given. So now we left with the portion that relates to the interest data balance. We're going to use the same